Some may say that trading is 90% charts and just 10% psychology. Others may differ, but in this video we are talking charts, and we're going to be going over how to chart stocks if you are someone who is brand new to charting or is fairly new and wants to get a handle on what the heck a candlestick chart is all about. Now, charting can certainly get very complicated and a lot can go into charting, but really it comes down to what you want to put in. I think a lot of traders, myself included, go through this phase where you get in, the charts are pretty simple, they're pretty easy, you start adding indicators, adding things. Next thing you know, you've got this. Then you start to realize that all that stuff is not actually helping you, and then you start to simplify it down, and eventually you find a nice happy medium, whether it's how you color the charts, indicators, all that great stuff. But the most important part of this video, the biggest takeaway that I want you to have from this video is you need to do what is right for you. You want to create and customize and chart stocks in a way that gives you information that you could act on that fits what you're trying to do as an investor, as a trader, whatever. There is no one size fits all, and there is no correct way to chart anything. Now, before we dive in, I do want to thank the sponsor of today's video, Iron Beam.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
Let's dive into what you need. You need a charting platform, okay? The one that we're going to use in this video is TradingView. This platform is available for free online, and you can also download their app on your mobile device and on your computer. They also have paid versions. We use the premium version, so we have a ton more features, but you do not need to do that when you're starting out. Now, that may be something that is appealing to you. It may not. If you have a brokerage platform, there's a very good chance they're going to have charts associated with that. So you can probably do all of what we talk about in this video on your brokerage platform, unless your brokerage platform caters specifically to investors. If it caters to investors, they're probably not going to have a lot of charts because they're not really catering to the active traders who will mark up their charts, put trend lines, draw things, all that great stuff. Once you got a platform to do your charting and analysis, we can move on to step 2, and that is going to be finding something to chart. Now, in this example, I'll use something like for myself. I like to take some of the largest large cap stocks by weights in the S&P and NASDAQ, and I will put that into a watch list, and I will use that watch list for the stocks that I trade because they have the highest volume, they're very, very liquid, and they move fairly similarly. You may not want to do that. If you want to focus in on a specific sector, for example, you may want to focus in on the retail sector, or you may want to focus in on the energy sector. Well, then great. You can go into those sectors, look those sectors up, and find what stocks represent some of the biggest weights of the energy sector, retail, discretionary, all those different stocks, put them on a watch list. If you want to trade Forex, if you want to trade, let's say you want to trade gold and silver, you want to trade the metals, or you want to trade oil, all of that is at your disposal. You just need to find something to start charting. And I recommend you do so in categories, and you categorize that with watch lists so that it's not super confusing. You're not jumping over here, over there, going from the S&P futures to target stock, to gold, to oil, to Bitcoin. Just categorize them and then focus in one sector at a time. When you're doing your analysis, it'll make things a lot easier on yourself. Now that we have that, we can get into the basics of a chart. First things first, there are multiple different chart types. You may be very familiar with a line chart. That is something that you see on like a CNBC or Yahoo Finance, or if you go on Google and type in whatever you're looking for, you'll probably see a line chart. That is going to be a series of zigzagging lines up and down that indicate the price over time of whatever you're looking at, whatever instrument you are looking at. That's a line chart. Is that very, very helpful to active traders or those of us who are looking to pull more information out of a chart? Probably not. That's why we get into the candlestick chart. Now there's more to it. There's bar charts, Heikin-Ashi candles, hollow candles. We're going to be using the traditional candlestick chart for this video as it's catered to those who are looking to get into charting stocks. And we have other videos on the channel if you want to dive deeper into some of the other candlestick patterns or chart types. That's available to you for free. So focusing on a candlestick chart, we have to understand is that these candles will be colored green or red. Now you can go into your charting platform and customize and change those colors if you choose to do so, and I highly recommend you do if you would like. But personally, for me, green and red's fine. I see them nicely and it works out great with the backgrounds that I've set for my charting platforms. And so I don't see really a need to change that. However, that does not change the meaning. The colors don't change the meaning. Okay, the colors we can customize, but based off a green and red candlestick chart, here's what we need to know. The candle has a thick, solid part, which we call the body, and then it has a wick, an upper and or lower component. Now, there may not be a very large wick. There could be a very large wick. There may be a tiny wick. That changes based off price action, which we'll get into here in a second. In a green candle, we have price action open or start that time frame at the bottom, which we'll get to the time frames in a second, at the bottom of the solid part of the body, and close for that time frame at the top of the solid part of the body. The upper and lower wicks indicate the range where price did trade that day, but ended up coming back to close for the time frame selected at the solid part of the candle. So, green candle opens at the bottom of the solid part, closes at the top of the solid. Red, vice versa, opens at the top of the solid body and closes at the bottom of the solid body. The upper and lower wicks indicate high of the day range or high of candle range or high of time frame range, and vice versa on the low side, the lower wick. So when I was talking about time frames, we can change the time frame on our charts. If I were to go from a 1-day chart to a 4-hour chart to a 1-hour chart, that's totally fine. We're just looking at more narrow or more zoomed in time frames. That's all. And when I look at a 1-day chart, if I see the top of a green solid body on, let's say, Apple stock at $193, that means that from open to close on that 1 day that we're looking at, because it's a 1-day time frame, Apple opened at whatever the opening price was. I can go look on the right-hand side. Maybe it's at 190, and it closed at 193. Maybe it had upper range to 193.50 and lower range down to 189.50. Something along those lines. Does green and red mean that it was red or green on the day? Not necessarily. We can use hollow candles for a little more information there, but all we need to take away from green and red is that on that candlestick, price was up, it moved up, green, down, red. And again, that's from open and close of that candle, and this can be applied to any time frame. 5 minute, 1 minute, 30 minute, 1 week, doesn't matter. Now, before we delve into the drawing and the fun of the charts, there's one more piece that I do want to touch on that I think is very important and we should definitely touch on, and that's volume. So on the bottom of our charts, we have an indicator that is selected as volume, okay? And many brokers may have this set up automatically. Some may not. The bottom shows volume bars, and the red will be colored when the candlestick is red, and the green is colored when the candlestick is green. But what this is telling us is how much of a given stock or whatever you're trading was exchanged on that day. And if we hover over it, in my example, I have settings selected so that the top of my screen will show VOL, and it will show me volume. And as I hover to different candlesticks and change where I'm looking at on the chart, that volume changes and it tells me how much was traded on that specific week in this example, because I'm looking at a SPY S&P 500 ETF chart that's on the 1 week time frame. So each of these candlesticks is 1 week. Now I mentioned that now because we generally will like to look for when we have high and low volume. And when I say high and low volume, it's really relative. So when we see big spikes or larger volume bursts on the chart, that tells us that we should be looking over there for what was happening during that time frame, because we had a lot of people exchanging price. There may have been a lot of news going on, a lot of reasons to go long, short, whatever was happening. That was an interesting time on the chart's history. And when there was a lot less volume, not that we want to disregard that, but that might not have as much weight because not a lot of money, not a lot of shares, not a lot of whatever the object we are looking at was exchanged on that given day. That can happen on days where we have half days around the holidays. For example, the week between Christmas and New Year's tends to be a very light week. We have even Thanksgiving holiday. We have in that week, we tend to see a lot less trading volume. So that occurs. But there also could be periods of time when it's not a holiday and we see lower volume, and then it's met by higher volume that reverses trend, or reverses the other way. So what I want to point your attention to is the volume. I'd recommend you use it up on your charts unless you're operating a strategy that does not require volume. And then from there, we can decipher how we want to use it and what's going on with price action. All right, so now into some of the fun. We're going to talk about support and resistance, and I'm going to pull up a couple of different charts to show us some support and resistance examples. Ticker symbol ADBE. This is Adobe, those of you who are familiar. And I'm going to show you some examples of support and resistance horizontally. So on our chart, we have Adobe right now. And if I were to pull up Adobe, I will see candlesticks like this. And I'm like, okay, cool, but for the visual learner, or for the person who likes to visualize, we want to add some lines here. So what I'm going to go ahead and do is I'm going to look for areas on the chart where I see price, where I see wicks or bodies of the candle hitting and respecting, whether it's to the same spot on the downside or the same spot on the upside. And we're not going to be able to find perfect, exact touches, but I want to find an area. So I will go ahead and use what I have is my horizontal ray tool. And I'm going to look right in here, and I'm like, whoa, I see Adobe right here was kind of consolidating for some time, but I can connect this blue line to 1, 2, 3, 4, 5, almost 6 candlesticks, okay? And so what I'm seeing with this right here is that Adobe was establishing and showing support at this $473 level for about a month of time, which is notable. I like to use the rule of threes. When I have 3 distinct candlesticks come down and touch a level and bounce off, I like to say that's a pretty solid area of support. Now I look for the exact opposite on the upside. So if I were to go up to the top of the screen, or if I were to scroll across, what I'll notice is that I can draw a line right here and connect 2 of these candlesticks, but it just so happens that Adobe also comes up to that same area and respects it again. Now, not perfectly, but within reason, we have Adobe respecting this area around $570 per share as an area of resistance. We have what we can call a double top high here, and then if you want to pair it up with this, you almost have a double top high on a broader scale across a couple of months. And so that would be an area that we would look at as resistance horizontally. Take a look at this chart on gold. This is a weekly chart on gold. What do we notice? We notice that we have a lot of candlesticks, upper wicks, and even some solid bodies that are all respecting around the same level on gold, and they're rejecting off that spot multiple times. In this case, we've got 4 examples, 4 instances since 2020. So going back a couple of years, that gold has rejected off of the same exact level. So what I'm going to do is I'm going to draw in my horizontal line, and I'm going to connect about 3 of those tops. And so what I'm going to see is that we have one area right here, we have a second area right here. You can almost call this one a third test right here, and we just tested it again even more recently. That's 4 areas that we've rejected, and that's a very strong area of resistance horizontally on the chart at a specific price level. So now I'm going to go ahead and use my trend line tool here on TradingView, and I'm going to see if I can connect 3 upper tops to these candles and draw that in a trend and not in a horizontal fashion. So let's see if I can go ahead and do that right here. I'm going to connect here, I'm going to connect here, and just like that, we can pretty much connect 3 of these tops. So what do I see? That mRNA was trading to the downside with this trend line acting as resistance. And when I draw a trend line on the tops of candles angled down, that's an area of resistance. And when I draw a trend line on the bottom of candles angled up, that's an area of support. Without getting too advanced, those are the 2 types of trend lines that I would start off with before you start trying to draw uptrending resistance and then downtrending supports. Those can get a bit more wonky, and we find that they're not as valid or not as valuable as the upper trend line to the downside and the lower trend line to the upside. I take that same trend line tool and I was able to find an uptrend, a very strong uptrend. We had 1, 2, 3, 4 touches to this trend line to the upside, and eventually it broke down months later. But here's an example of that uptrending support here on mRNA. Again, same idea. We're trying to connect the bottoms of approximately 3 candlesticks. If we don't have 3, it's not really a valid trend. Ideally, you'd want to have more, but I think 3 is the magic number to identify uptrending support and downtrending resistance. Now, the breaks of these trend lines can signal big time moves, as we have seen in the past. And what we saw here is that mRNA extended well out over the trend line. But when it came back to test the trend line, it broke down in a big manner, and we had a very sizable move to the downside as the uptrend was no longer respected, and we saw sellers take control. So with that said, that's going to give you a great starting point to start marking up your charts, charting stocks, and have an understanding of what you're looking at when it comes to the intimidating stock chart. Hopefully that was helpful. I'll leave links and resources down below this video. Check those out if interested, and I'll see you guys in the next one. Thanks so much for watching. Peace.